Today, we saw the stock market come rallying up. However, if you look at the S&P 500, the SPY, we have an inside day. And what does that set up? That tomorrow is likely going to be a breakout or breakdown from this pattern. Let me know in the comment section down below. Do you guys think it's going to be a breakout or breakdown? We come over and look at the fear and greed index. Right now, we're sitting at 47, almost in the middle of neutral territory. And we've been spending a lot of time over the past couple weeks over here in the fear territory. So it's kind of nice not to see this gauge back in the red. Now, when we come over and look at how the indices fared across the board, the Dow was up 167 points. The Nasdaq was up 190 points. S&P 500 up 40 points, and the Russell 2000 up 1.03. Now, we look at advancing issues versus declining. We had 62.6% of issues advancing on the day. Then we come over and look at the sectors. Only 3 sectors were in the red: real estate, healthcare, and financials were the laggards out here for today. And like I said a moment ago, the S&P had nothing more than an inside day. The QQQs basically had an inside day. We look at the diamonds also having an inside day, and the Russell 2000 also with an inside day. However, something we got to really pay very close attention to over the next 2 days. The first, that Trump was slated to announce reciprocal tariffs either Monday or Tuesday. Well, we made it through Monday's trading session. No news about that. So tomorrow, that could be on the agenda. Then we come over and we look at the economic calendar for tomorrow. And let's not forget, tomorrow, Jay Powell is set to be testifying starting at 10 a.m. Then on Wednesday, we have CPI or CPI coming out. Then Powell is going to be testifying once again on Wednesday. Now, something to take note of. Usually when Powell has these 2-day testimonies, one day ends up being bullish, the other day is bearish, and it could be vice versa. Maybe tomorrow is going to be bearish and the following day is going to be bullish, but normally one day sways one way and the other day sways back the other way. We look at the heat map out there today and we can see we had a slew of green out there. However, with the Mag 7 stocks, Tesla was the only one in the red. Apple barely able to eke out a very small gain. Speaking of Apple, if we look at a chart of Apple real quick, Apple still, I think, technically had an inside day or very close to it. But as we look at this, Apple's been kind of stuck in this consolidation. But you know what? Here's something that has not been stuck in the consolidation. That's going to be gold. Today, also smashing another new all-time high. Could this also be a warning sign that there's a lot more uncertainty out there that a lot of people just aren't pricing in at this moment? We also seen the dollar index on the rise once again. Then we look at the 10-year yield also closing green on the day. However, something that did not close green today was the volatility index. When we look at the VIX, basically dwindled all day long and then formed this lower level consolidation. Is the VIX getting ready for another breakdown through this area, or are we about to see a volatility spike as soon as Trump announced those reciprocal tariffs? Now, we come back over and we look at the SPY real quick, and we look at this on the 4-hour chart. MACD indicator trying to cross back up, but something I want you guys to pay attention to. As we look at over here, we can see we have a high, lower high right here. Is this going to end up being a higher high, or are we ultimately going to fall right back down? As we look at the 30-minute chart real quick, notice the MACD indicator is technically with a bullish cross, but then we have a little problem out here today. One, we did not hit the minus development area above us, but something else that's really glaring would be this large gap that we have right down below us. We gapped up today. We never came back and tried to come back in and fill the gap. However, if we look at, let's say, the Dow Jones, it was able to come back down, fill the gap. We look at the small caps coming back down, filling the gap. So why, oh why could the SPY not fill the gap and make things easy on us? Now, as I look at the profile for tomorrow, how am I going to deal with this? Well, I'm going to classify this as a P as in Paul, which indicates if we break value area low, we're likely going to explore the lower third of the range. And here's how I want to play this. If tomorrow we're trading below value area low, I want to target down here towards gap support at about 602.76. Anything below that, I then want to turn my attentions all the way down here to see, okay, can we make it all the way down there, potentially filling the gap that we have down below us? Now, I want to make everybody aware, Apex having a flash sale, 80% sale off all their evaluation accounts, passing as little as 1 day. Use the link in the description box down below, and don't forget to use promo code Mike at checkout. Now, as we come over and start looking at the futures markets real quick, look on the 4-hour chart. This is something we're talking about today on the live stream. Now, if you guys want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But if you notice, what do we have out here? We broke the 50% retracement on the way back up. We broke the 61.8 retracement. However, we have not violated the 78.6 Fibonacci retracement level yet. If we do, highly probable we're going to come into this minus development area. Then I want to look, do we get some type of reaction from that area? Also, something to take note of last night when we had that gap on the way down was the fact that if you measure the Fibonacci from the swing low up to the swing high, notice we almost gapped all the way down towards that 61.8 Fibonacci retracement level, and all they did was bid it up from that price point on. You can see on the 30-minute chart right down here, they gapped it lower, bink, right back up. We broke value area low, came up, tested the point of control, made it all the way up through value area high. Now, when we look at today's profile, again, like I talked about with the SPY, it's going to be that same shape, that P as in Paul shape profile. And as I'm looking at this, what am I really expecting moving forward? Well, value area low is going to come in at 6,079.5. We're going to have the point of control up here at 6,088.5, with value area high being 6,093.50. Here's how I want to play this. If we start trading below value area low, then I want to turn my attention towards this lower level consolidation. You might say, Mike, I thought you said a P-shaped profile. We're likely going to explore the lower third of the range. Yes, you would be correct. However, the lower portion of this profile from where all the volume is built out is very, very thin. So at first, I want to turn my attention kind of over here towards this candle wick, somewhere in the ballpark of 6,071. We start breaking that, then I want to turn my attention down towards the prior days or Friday's value area low and kind of in between these two candle bodies right down in this area. Now, something we do got to be mindful of though is if indeed this is going to end up being an ABC pattern on the way up, that could potentially take the S&P 500 up to making new all-time highs. The A to B leg is an impulse leg. The B to C leg is a corrective leg, and then we project up here for D, which gives us a price completion at about 62.01. And if we scroll this back a little bit, you can see that would be enough to go ahead and make another new all-time high. Let me know in the comment section down below, do you think the S&P is about to make a new all-time high before we see a 10% correction? Now, as we come over, we start looking at the QQQs real quick. Notice the Nasdaq, we had that inside day, which we talked about on the daily chart. And we have this potential for this A to B equals C to D pattern, which actually completes all the way up here at about 543.93. Now, in order for this pattern to be validated, we must break above the swing high right over here, which comes in on January 24th. Now, as I'm looking at this, all right, we look at the MACD indicator. Do we have a huge edge? No, we do not. On the 4-hour chart, what do we got going on over there? MACD indicator is crossed to the upside. Then as we come over and start looking at the 30-minute chart, you can see that large gap we had out here from today. And when we look, notice we came right into that minus development area. First time we came into it, we kind of pushed down a little bit, and then we just rocketed right back up all the way through the other side of that area. Now you can see we've had this upper level consolidation today. We basically ran up and just consolidated for a majority of today. And tomorrow, if we do start breaking below value area low, I then want to turn my attention towards this little minus development area of the profile at about 528.38. Anything below that price point, I want to come all the way down here towards gap support at 526.76. Then anything below that price point, I want to see, okay, can we make a run all the way down towards the lows, potentially fill in the gap? Now, when we come over and look at the futures markets, this is going to be slightly different than what we saw with the S&P. Notice if we measure from the low of last week up to last week's high, notice last night when we gapped down, we only came down towards the 50% Fibonacci level. Then a second note would be if we measure from the high of last week down to the low of last night, notice we violated the 50% retracement. We violated the 61.8. We made it above the 78.6. Now, anytime we really start getting above the 78.6, it increases the probabilities that we're going to make 100% retracement of this down move we just had in this market. Then let's not forget, we do have this untested point of control up here at about 22,007.25. Now, if indeed we can make it above this high right over here, similar to the S&P 500, we would then have another A to B equals C to D pattern. This time it would take the Nasdaq all the way up to 22,441, which would be enough to go ahead and take out both of these untested point of controls that we have above us. And also it would be right near all-time highs in the market. Very, very close. Now, as we come over and start looking at the daily profiles real quick, notice what we have. All right, we have a little bit of a minus development area here in the profile, which I want to pay attention to. And then all down through this whole area of the profile, the market is very, very thin. Very light volume was traded through those areas last night. Now, as I'm looking at this, notice we have a potential small double top pattern that could potentially be about to play out. Now, if indeed this double top pattern does get validated, which means we'd have to break below 21,816. We get a price projection down here about 21,738. However, if we cannot get below this swing point right here, this could be nothing more than upper level consolidation, getting ready to run where? Right back up here towards the highs that we saw on last Friday. However, if indeed this is going to turn and go back up, at minimum, even if this ends up being a failed double top pattern, we slightly break that swing point, then we turn and come back up. I'd like to see this minus development area kind of tested. And then if we start moving right back up through that area, then we can look to get long, trying to play the break of these swing points over here, then turning our attentions right back to the highs that we saw from last Friday. Now, if you guys want to learn how to reset a funded account, yes, I said a funded account, not an evaluation account with Take Profit Trader, make sure to watch this video right here.